Hey everybody, it is Wednesday the 2nd, and the market succumbed to some profit taking here today, bringing it right back to the 20-day moving average and the anchored VWAP from that prior test of the 20-day moving average right here. Below that, we have the anchored VWAP from the prior low, and right now, this market, we have to look at it as guilty until proven innocent because we're below declining 5-day moving average. So as long as it's below declining 5-day moving average, yes, there's likely to be bounces, and those bounces might find supply up at the prior band of support, but they're expected to be guilty until proven innocent until we see the 5-day moving average start to flatten out and turn higher again. I'm simply not entertaining the thought that I should be buying the S&P 500 or the NASDAQ for that matter because we're below the 5-day moving average. Tomorrow we get rid of this data. That'll assure the 5-day moving average continues lower. If we see a rally back up through here, I mean, it's possible this could be just a bear trap and that that this is a bear trap and we continue to move higher. We did come down to the anchored VWAP from this low and touch perfectly, and we've found buyers there before. But right now, it's just too risky to say, hey, I'm calling this a shakeout and I'm going to be a buyer. If you are going to do that, if that's your personal mindset, then your stop has to be under here. What we often see, though, is if that's the case, then tomorrow morning, we're likely to undercut that and then frustrate all the buyers from today before it does that. So I'm just simply looking at this as broken support, declining 5-day moving average, below the 20-day moving average for the first time since early May. And you have to treat the market with the respect of risk that it deserves right here. The Russell 2000 sure is finding that supply where it's supposed to, and we saw that gap lower here today, below this level that we thought might be our first level of interest as far as potential support, but it continued lower, and now in the afternoon, it looked like that might have found some supply there as well. So looking forward, we'll want to keep an eye, of course, on the anchored VWAP from the recent high in all of these markets. Here it is in the Russell 2000. Let's go put that on the SPY and then on the NASDAQ as well as this high right here. So those kind of come together in that area for the NASDAQ. But back to the Russell, some further profit taking sure seems reasonable. I'd like to see it come down through that 20-day moving average. It maybe undercut this prior low as well, and then spend a day below there. That way it'll scare all the 20-day moving average buyers, and then they'll spit it out, and perhaps it comes down to the anchored VWAP even from this low, which would be great to see. I mean, the deeper the shakeout, the better, because then it gets more shorts involved, gets rid of the weak holders who then look to purchase later, and all the psychology I talk about all the time. But right now, again, it's just declining 5-day moving average, straightforward, guilty till proven innocent. Don't be looking to be a buyer in any of these markets. Now, the semiconductors, the 5-day moving average is rising, and where will that 5-day moving average, rising 5-day moving average be tomorrow? It will be in a state of decline because we're getting rid of this data right here and replacing it theoretically with data down here. The market would have to get up to this level and above that 5-day moving average for the 5-day moving average to stay flat and continue to move higher, and that seems highly unlikely. It seems a lot more likely that we would come down and test this anchored volume weighted average price from that gap right here, and that ties it in with the 50-day moving average as well. So, for me, I think that maybe some upward movement and then crush it down through this little band of support recently down into this range. I think that would scare some people nicely and would be a good opportunity to set up again and see if maybe the buyers can come in and save the day again and continue this uptrend. Until then, it's just a lot of uncertainty. I'm not here to throw my money away betting on uncertainties and hoping that a certain level holds. My job is to manage risk, and manage risk management means be on the sidelines or look for short opportunities in the near term. The XBI biotechs, they're back below the year-to-date anchored VWAP. They're below the 20 and 50-day moving average. They're below the 200-day moving average. They're below the anchored volume weighted average price from the year-to-date low right here. So when I see that, it's telling me the average participant, even from the lowest point that it's traded at this year, is losing money, and that's going to bear, bear some weight. If we see something like this and we stay trapped under these, I wouldn't be surprised at all to see a deeper drop in the biotechs. They've been just kind of a mess here on the weekly time frame, still within this bigger range that is loosely defined by this, and you could say maybe that's even the tighter higher end, and that's the lower end. I mean, a test of the lower end wouldn't come as a surprise to me. It's not a call for that to happen, but it definitely is something that I'm looking forward to as a possibility here in the near term, that it would start to break down. Financials are continuing their breakdown, and this is why, even though we look at this as a potential bullish flag, we look at what's going on inside that flag, and we see that this market has been making lower highs and lower lows below a declining 5-day moving average. So call it whatever pattern you want on that daily time frame. It's not a buy while it's below a declining 5-day moving average. It's guilty till proven innocent. Maybe it's going to be find buyers at the 20-day moving average. Maybe it's going to dip down and find the buyers at the anchored VWAP from that low. Right now, all I know is from an intermediate term standpoint, there's no reason to buy this market. Energy names, very similar to the Russell 2000 in that prior area where we have seen resistance. Let's just look at that again on the Russell. There's the Russell, and here's the energy names. That prior band of resistance that where it got extended into that area has found supply once again, and we're backing off from there. And now we have a very clear pattern here on the intermediate term time frame: lower highs and lower lows, and a declining 5-day moving average. Don't buy the dip. Wait for things to settle down and show that they're strong again. Something like this, something like this. Don't be a buyer down here. Wait for the buyers to reemerge and show that they have the upper hand once again.